Welcome, fellow business brokers, to Let's Chat, the show where we talk to attorneys, CPAs, financial planners, and others so that we can increase and become better in our industry. Today's show is extremely, extremely important because we're trying to accomplish something that's going to affect our entire industry moving forward. And we're going to need your help, and we're going to need the help of all the business brokers associations across the country. First, I would like to introduce to you Steve Mariani. How you doing, Steve?
I'm well this morning, Jim. Thank you for having me. And as you mentioned, this is a critical, important issue that I think every broker in the country needs to be at least aware of and understanding of. So thanks for getting this out there and having me on the show today.
Absolutely, Steve. I'm telling you, I think that, this show, if any business broker or lender or anybody else that's affiliated to our industry, if they're going to watch any of the shows this year or in the future, this is the show to watch. This is the most important. Let's just cut right to the chase. And, let's talk a little, I'm just going to mention what you're trying to accomplish. Steve Mariani wants to increase the SBA lending limits for 7A loans from $5 million to $10 million. And Steve Mariani is doing a huge push on this. Steve, thank you so much for stepping up. I think this is critical. This would be such a great opportunity for our industry. It'd be a great opportunity for buyers out there, for sellers out there, lenders, everybody, not to mention the U.S. economy in its whole, I really believe. So, Steve, first, before we get into the meat of trying to increase the SBA lending, I think everybody out there that's listening should know who you are. I mean, unless they're living under a rock, Steve, you are instrumental in our industry when it comes to SBA lending. You're one of the most knowledgeable people out there with SBA lending. And, but I do want you to have the opportunity just for a few minutes to, talk about Diamond Financial and what you guys do over there at Diamond Financial.
Sure, I'm happy to do that, Jim. And really what this relates to is where my data, information, and understanding comes from, because one of the things our firm really that separates us from everybody else is we are connected to many lenders on a credit underwriting level. So we're seeing the real back offices from many lenders, which no one else can do. Each lender can understand their own credit boxes, but there's really no conduit to connect all the lenders. So that's kind of, we've been doing this 30 years. I'm on lender calls constantly with lenders that we work with and lenders that we don't, because we're all trying to share information. When new rules come out, such as they did last year, especially with the magnitude of the changes that they implemented last year, it takes months and months for the interpretation to totally trickle down to all the lenders. It's let's read them, try and understand them, and then determine what the actual interpretation is. And that's really where our firm comes in, because we're a connection between them all. So many lenders contact us saying, well, how do the other lenders interpret this rule? We're doing it like this. Do you see other people doing it like this? So I describe this to tell you where my database comes from and where the information that I share with the broker communities all relates from. It is those internal credit people and the conversations that I have with all those lenders. But on our firm, we've been in business almost 30 years. We are client representation, basically, when it comes to SBA rules. One of the main philosophy differences we feel is lacking in the lending industry is, when you're talking to a lender, all they're thinking about is how to fit that transition into their box, as opposed to how to best structure it using, every SBA rule to benefit every party involved. And that's kind of what we do. We structure it correctly based on the SBA guidelines and rules, and then expose a lender. So that's really where our company differs. We've been doing this, like I said, since 96, 97. And we work and specialize working with the higher net worth individuals on those larger goodwill transactions, which is really what drove me to understanding this. It was a conversation, and I'm not opposed to telling you, with Jeff Snell, who handles a lot of those larger transactions. And we're finding ourselves in a lot of larger transactions across the country with brokers. Jeff brought this item to my attention because all over the web, the latest rule change, and we'll talk about that in a second, but the interpretations of the initial rules were easy, and now we're getting down to the nitty gritty, and that's really where the rubber's hitting the road these days. So there actually was a rule change, whether it happened by default or not, that now is in place that allows an individual to go over the $5 million cap. There's been a $5 million cap in place since 2010. And now based on this new rule, as long as you're buying an industry, a different industry, you can secure an additional $5 million loan, as long as
On
it's
top
not
of
in
the
the
5
industry
million,
you're a
the initial
professional in.
5 million, right, Steve? So you
Yeah,
can get it. Okay.
yeah. Not only one additional 5 million, multiple $5 million loans. The rule doesn't limit you to an amount of $5 million loans. What it says is it must be in an unrelated industry. Well, once Jeff, got into the conversations online and brought that to my attention, he said, this makes no sense to me. And we had a few conversations and realized, well, if you're going to do this in an industry other than where the borrower's resume fits, why would you not help him expand into his industry? And that's really what sparked this conversation a few weeks back.
Yeah, I watched that video with you and Jeff Snell, and you guys did an excellent job. And you guys were talking about, this is this new rule change. Does it allow you to actually buy multiple, do more than $5 million in loans? And you guys talked about, yes, it does, but they have to be different NCAIS codes, basically, right?
That's correct.
And I got to say too, the funny thing is, I love Jeff Snell. The funny thing is that his episode, it was supposed to be the next episode released on Let's Chat. This one is bumping Jeff Snell, so I feel bad for Jeff because I love Jeff. But it's just the timing of this. We have to get this out because I think that that conversation that you had with Jeff, and then later on you said, you know what, I want to really actually try to do something to increase SBA lending to make it more than 5 million, so it doesn't have to be a different type of business. It could be something in the same industry. So,
absolutely, and really, where I started was polling the audience. I started talking to lenders. The first thing I did was understood the interpretation, and I polled a few of my lenders to say, "Hey, this is our understanding. An individual can get and secure multiple $5 million loans." And they all agreed that was the understanding. So then I took it to the next level and contacted SBA directly to confirm. And sure enough, I got a response from SBA that said, yes, that is the rule and that is eligible. And you can write multiple $5 million loans. Well, understanding that that was the case, I didn't understand why they wouldn't help people in the same industry to expand.
That's the funny thing, Steve, because one of the biggest criteria for SBA lending, as we all know, is that the experience that an individual has, and so if you've got somebody out there that, bought a business, let's just say a landscaping business for $5 million, they would not be able to get a loan for another SBA loan for another landscaping business, but they could maybe get it in HVAC or some other industry, which doesn't make sense because, the whole thing is you want the person getting the loan to have experience, if possible, in that particular industry. So what you're trying to accomplish by increasing the lending from $5 million to $10 million for the same type of business just makes more sense than what the ruling states today.
You're exactly right. You hit the nail on the head, and it comes down to the NIASA code. It's all I want in this new rule is the NIASA code requirement removed. Because what that states is it must be in a different NIASA code, industry code. Well, that makes absolutely no sense. That's the verbiage in that rule that I would like removed. And let's face it, back in 2010, when they raised it from 2 million to 5 million, that 5 million doesn't buy what it does today. That was 14 years ago.
Yeah.
Just based on the 3% cost of living is 42% reduction.
You're talking 3% cost of living, but 5 million doesn't buy what it did in 2019. You know what I mean?
Right.
And that was 5 years earlier. Like you're right. It's $5 million in 2010 versus $5 million today. It's a lot of money, but at the end of the day, it's a big difference in buying power.
Especially when we're talking about an 11% interest rate on SBA loans. So my high net worth borrowers that used to look at $3, $4, $5 million transactions, they're in the $6, $7, $8 million transaction range now. And based on the SBA guidelines, we can't help them. Well, like we just discussed, it's a minimum of 42% less in buying power, not including your last 4 years of double-digit increases across the board on most products.
Absolutely. Steve, I want to dig into this deeper, but before we go too deep, I really want to say this to the people that are listening out there, to my fellow business brokers out there, to lenders, anybody that's affiliated with our industry. we are going to need your help. Steve is going to be starting a petition. It's going to be done within a day or two. And he's going to be sending that out, that petition. And we need everybody to be pushing that petition. And before I go any further, I want you to understand that, first of all, Steve has a good track record. He really does. He was the architect for seller forgivable notes when it comes to SBA lending. That was something that he saw as an opportunity. He really pushed that. And that's something that we're able to now do in our industry because he saw that foresight. And I also want to remind those brokers out there that were listening to my show back in 2020 when we were going through the COVID situation. There was a handful of us that were trying to get a petition around when it came to PPP lending. And Steve, you were involved in that situation. And just to give you guys a reminder of what was happening was that, when the PPP loans came out, which was greatly, greatly needed because of the COVID situation, it helped so many small business owners across the country. It kept them afloat. That was an important thing. But what was happening was there's only so much money that the SBA has set aside to allow for the lenders to lend. And the money was being blown through with the PPP lending. So it was depleting the monies that would be available for 7A loans. And we sent out a petition, and most of the business brokers associations across the country, business brokers themselves, lenders, everybody got on board and signed a petition. And I think we had almost 1,200 signatures, didn't we, Steve?
I think we did within no time at all. I think it was 10 or 2 weeks. We had, almost 1,200 signatures.
Now, I don't know, Steve, and I don't think you know either. We were both like really pushing that for weeks. But I don't know if we can really go back and say, hey, we without that save the SBA lending program. But I like to believe that helped. I like to believe that, the efforts of business brokers around the country all coming together and saying, yes, this is important, save the 7A program. Hopefully that did play a part in helping, things move forward with the SBA 7A program. So, that's what we're asking people out there today, again, is that we need everybody in our industry to pull together. And when you see this petition, to sign the petition and forward the petition on to every broker to all the leadership and all the associations that you belong to that are affiliated to business brokerage or M&A work. And, let's get as many signatures as we possibly can because, we got to get the attention of the SBA and of Congress and maybe just us all pulling together and saying, hey, this would be a great opportunity. Hopefully that'll help. You want to add anything to that, Steve? And I'm sorry I went down on a rampage there, but I want people that are listening to know, maybe we do have a little pull if we all bring together.
Well, on that note, to expand on what you just described, right, I'm looking for IVBA support. I'm looking for M&A source support, but I'm also looking for the NSBA, which is the leadership council across America representing 65,000 businesses. They're the ones in D.C. that are in every hearing, have direct access to SBA admin. We're setting up a meeting with them for next week.
Fantastic.
So there will be some progress there as well. But I want to be able to, when I talk to them, say we have the support of multiple lenders and every broker across America. There's no reason why we shouldn't all get behind this program and see if we can't get this increased.
We need the help of the state associations, the regional associations. Hopefully we can kind of maybe get beef on board. Who knows? But, there's going to be a lot of work that needs to be done. But, we need everybody to just, when you see that petition, it's going to be posted on social media. It's going to be sent out by email. Steve, you're going to be sending it to your database. I'll be sending it to my database. Hopefully we can get Business Brokerage Press on board to be sending it out. And we just need people to be forwarding that on to their leadership and their associations and every business broker they have so that, we get as many signatures as possible. Steve, I love this idea. When you called the other day and we had that conversation and you said, Jim, I really would like to try to get it so that our industry can go from a $5 million SBA loan to a $10 million SBA loan. I was just like, you're absolutely right. Maybe at this point, Steve, maybe we can talk a little bit about, the importance of SBA lending because, it is the backbone. Small business is the backbone of the United States. I mean, this doesn't just affect us as business intermediaries or you as a lender or the buyer or the seller of a business, but this helps the entire U.S. economy, right?
Oh, absolutely, on so many levels. And if there is anyone listening to this podcast and want to go and check out my writing, you can visit us at easysba.com and look at our March newsletter where I put specific facts and statistics into the newsletter. If you want to read about my program and the support and the backing of it, please go to our website and look at our archived newsletters and find the March, which was just this month. But it will outline all kinds of data. But as far as SBA lending, let's face it, it's come a long way in the last 20 years. If we go back to the Ed Pendarvis days, it was, no, do seller financing on all those businesses. But as businesses grew and companies got larger and there was a bigger need for higher levels of loans, SBA's just really dominated the broker industry. And without it, so many brokers would be making so much less money. So this is important on so many levels for the industry as a whole. It isn't even just specific broker offices that I'm having in mind.
But Steve, I read a statistic that 20 million SBA loans have been done since its inception in 1953 when Eisenhower signed it into law. 20 million loans. And then last year in 2023, there was, and this is 2023, and this is SBA 7A loans, $27.5 billion in 7A loans across 57,000 loans across the United States. So it's a big thing. And Steve, you and I had a conversation a couple of years ago, and I never knew this. And that's why I love talking to you, Steve, because every time I talk to you, I feel like I learned something new, and I just love it. But you were talking about that the SBA is a money-making venture for the government. It's one of the few government programs that actually makes money. If you could elaborate on that with the audience, that'd be great.
Absolutely. Great point. That's exactly right. The 7A program has been self-funded. The SBA program has been self-funded since 2001 when our funding was cut to zero. And we've been striving or thriving ever since. So the 7A is the moneymaker. Now, when you drill down on the 7A transactions and where most of the money is generated, it isn't on the $100,000, $200,000, $300,000 transactions. They actually have a much higher default rate than the larger transactions. The $2, $3, $4, $5 million transactions have a much lower default rate, pay a lot higher SBA fees, and are really the contributing factor to generating the money in the 7A program. Again, when you're looking at it from that perspective, there's no downside. If the default rate was much higher on those loans, that might be a concern, but that's not the case. Those higher loans support all of those community service programs, smaller transactions, and everything else that has it has a higher default rate, for lack of a better term. More loans go bad in the $200,000-$300,000 range than the $3-4 million range. It's just
right.
Fact.
And that helps fund programs like FEMA and things too, right? The SBA lending?
It does. It does. All of the SBA money that comes into SBA does fund FEMA and a lot of the other programs as well. So, that's the only funding that they get. There's no subsidy for the SBA programs. And
so in theory, if there was more lending being done, there could be more money that the government is making to fund, bring even more funds to like FEMA and other programs. And I think FEMA is such an important, government agency in this country. I mean, it helps, anytime there's a natural disaster. I mean, it does so much, but, in theory that could happen. As far as the lenders go, it reduces the lender's risk a lot, and it kind of diversifies what they're doing as well. So it's really helping the lenders and the banks and people like that.
Especially now with all these new rule changes, I mean, what they're encouraging and pushing toward is much smaller local community-based loans for those underserved communities. And I'm not opposed to any of that. It's just that I don't want that to affect our larger loans by increasing the defaults to a level that's unsustainable. And that's really what the lenders are talking about in Congress. They're saying we're happy to produce these loans. The only problem is understand we're going to run out of funding because we're not writing enough on the larger side and enough loans to support these new programs you're implementing. And that's where I see a big gap as well. So
you're talking
again,
about talking about
yeah,
things like fintech, right? The fintech
I
loans.
am talking about
Yeah.
not only fintechs, but the local community loans that they're encouraging at $25,000 and $50,000. The fintechs, right? They're supposed to be funding really quickly and very little qualifications and a lot of other criteria. But no, the big concern in the lenders market is, will those loans cripple the 7A program by increasing the defaults too much?
Because lower the loan, like you said, the lower the loan amount, it's kind of been proven the more default that there is.
Exactly. What I did was back in 2010 and 11, when our defaults were at over 12 or almost 12% in SBA, I went and drilled down, and almost 8% of those defaults were startup businesses less than 2 years old. So what that told me back in 2011, and when I did the homework, was it wasn't the acquisitions that created the huge default. It was all those 2-year-old and less startup loans, which is what the government program is trying to push now.
Yeah.
Again, I'm not opposed to startups and encouraging people to start businesses. We just have to make sure we have the back end to support them.
Do you think the lenders? I mean, because you talk to a lot of lenders, and obviously, you mentioned you talk to lenders about increasing the lending limit from 5 million to 10 million on the 7A program. At the end of the day, do you think the lenders will be on board with lending that much money? I mean, that there's been certain rule changes over the years where the SBA allows certain things to happen, like the 0% down and things like that. Lenders were just like not getting on board with that. But do you think the lenders themselves, if the SBA did say yes, you could do SBA 7A loans up to $10 million, do you think the lenders themselves would get on board with doing loans between $5 and $10 million?
To that exact point, hence the reason I was polling the lenders before even taking on this campaign, and 3 of my top lenders said we would absolutely be on board. Now these are the lenders that will write up to $5 million worth of goodwill already, so they're in that aggressive markets. You're not going to get that at your little local bank, but it is going to absolutely open up the opportunities for those more aggressive lenders to help more people and create more jobs and expand larger type companies for these individuals. So yeah, I have 3 lenders that are on board today if I can make this increase happen.
Steve, I'm going to mention something that anybody that watches my videos on a regular basis is probably so sick of me saying, but I'm just going to keep saying it, because it's a big thing. 40% of all business owners out there in the United States was born before 1964. We have this huge baby boomer generation out there that is in the process of retiring or is on the cusp of retiring. I think there's going to be there's going to be a wave of businesses hitting the market. And, with that, when you've owned a business for 30 years, 40 years, you're increasing those chances that you are going to be selling, that you do have an enterprise value of your business up to $10 million. So this is going to be another avenue for those business owners to exit, with buyers coming in with an SBA loan. It's just opening up a whole new avenue for them.
You just hit the nail on the head. If I had $1 for every time I had to tell the broker, I'm sorry, your seller built his company to the wrong financing level, because those 70, 80-year-old people, I'm seeing them all day long. And I'm doing a lot of those transactions right now. We have a 6.6, we have a 7.3, but I'm thinking so far outside the box that this shouldn't be the case. He shouldn't have to, at 80 years old, hold $1.5 million to bridge the gap between my $5 million and what we have to have. And that's really where I think that we're doing those businesses a disservice. These people have worked in it, like you mentioned, for 30 years. They have built it to, a value of $6, $7, $8 million. And now you're telling them that their family can't benefit from that for the next 10 years because they have to hold a $2 million seller finance note. That just makes no sense to me. But there are more and more businesses in that range, number one. And number two, my high net worth individuals that used to be able to live on $400,000, $500,000, $600,000 income, based on all the double digit, expenses we're seeing these days increases, they're now looking for $600,000, $700,000, $800,000. And $1 million, and that could be after debt service, which puts our true SDE number someplace $1.5 million maybe. Well, now you're talking $6-7 million transaction, and that's just to keep them at the level that they are as exiting executives from a business. So that's where I think that the real gap is, and that's what we have to fix.
And you know what, Steve, on top of that, it's also, labor costs have increased, cost of goods has increased, all expenses, down the P&L have increased for business owners. So they've had to increase their prices, obviously, to be able to afford all that. So they're doing higher gross sales than they've ever done. Everything's being adjusted on the business itself. So there's going to be more businesses that, maybe 2019 they would have sold for $3 or $4 million. They haven't, because I deal with this situation all the time, Steve, where I talk to a business owner that, they've owned their business for 30, 35 years and they're looking to retire. But the last 4 or 5 years, they haven't been as aggressive in growing the business. They kind of hit a point where they're pretty successful in the business itself. That they're happy with how much money that they're making. They've the systems and processes in their business is kind of smoothed out. And they really don't, because they're getting older, they don't really want to go through the process of growing the business anymore. They just kind of keep it where the business is at. But it's just naturally the business has gotten bigger because they've had to increase, increase their prices to afford all the increases in cost of goods and labor, et cetera, that a business that in 2019 might have sold for, $2, $3, $4 million might be selling for $6 or $7 or $8 million just because of that.
You're exactly right. $500,000 does not buy what it did, like you mentioned, just 4 or 5 years ago. And if they have a $200,000-$300,000 salary requirement because they're an exiting executive, they're in the $5, $6, $7 million price range again. And there again, that's what I see as the underserved market today. And there again, Jim, 44% of all Americans are employed in the private sector. Why would we not want to support these people and allow them to buy another business in the same industry and double their staff, double their employees, double the size of their location, and do more, in my mind, good in the world?
Let's look at this the other way. Steve, I totally agree with you, by the way. But let's look at this. Let's flip it the other way, too. You get into a business enterprise value of, $6 million, $8 million, $10 million, and it doesn't, and it's hard to get it. You have to, like you said, you might have to pull some, magic tricks out of your little hat there. But for the most part, you can't do an SBA loan for that kind of, enterprise value. So now, that business that's selling for $7, $8, $9, $10 million, it's mainly going to be private equity groups that are going to be acquiring that business. And, you don't have to go down this avenue if you don't want to, Steve, but I'm willing to open up that door. I don't know. For me, personally, I think there's a place for private equity. I think private equity, adds to our economy and, helps grow businesses. But I also think private equity has, over the last 30 years, has increased substantially. There's more private equity groups, and I wish I would have looked up some statistics, but there's more private equity groups today than there ever was before. But you know what? I don't know. When I look at a private equity group, and, I know that they sell themselves on their, the people behind the thing and everything like that. But at the end of the day, they're just looking at numbers, number. I still like that individual buyer that, has worked in their corporate world all their life, has done really well for themselves. They're in their 40s or 50s. They have a decent salary. They've got a good net worth, and they're looking around and saying, I'm not getting any younger. I've always dreamed of owning my own business. And, this might be my last chance to go out to acquire a business. And they're acquiring these businesses with SBA loans. And, that individual buyer, that since they have all that great business experience, they're bringing it to that business, and they're taking that business owner's legacy, and they're able to increase it even more and build that business even greater, implementing things that they're bringing with them from the corporate world. And, that individual buyer, I love that individual buyer more than the private equity group. I think they're going to be more hands-on with the business. They're not going to be bringing in, a manager, a management team. Typically, they're not looking to flip it in 4 or 5 years to another private equity group. They're going to try to grow it and build it themselves. There's usually a really good relationship, post-closing between the buyer and the seller. So I like that aspect as well.
Well, you're exactly right. It's a private sector owner operator mentality. You know what? The employee morale changes. Everything changes when you're bringing in a management group. And typically, as you mentioned before, if they've built it for over 30 years, they're emotionally attached. They don't want to see it become one of 270 franchise locations. They want to see their employees taken care of. They want to see,
The
I've
customer's taken
seen.
care of.
I've seen a lot of sellers who are saying, their number one priority in any sale is make sure my employees are taken care of. These people have been with me 8, 10, 12, 15 years. Kathy started the company with me 30 years ago. Make sure she's taken care of. Instead of looking at it from an economic standpoint where Kathy's not cost effective, she has to go and, everything else that goes on. So, that's near and dear to a lot of those, as you mentioned, 30-year-old sellers or been in their business 30 years. I talk to every client up front and I tell them there's probably going to be an emotional attachment if he's been running that company for 20 plus years, no matter what. And that's really what matters more to him than the funds. As you mentioned, he's been making money for 20 years or 15 years or however long he's really been generating income. It's not about the money typically when they're selling a $5, $6, $7 million transaction. It's less about the money and more about what you just described is supporting the small businesses in America.
Yep. And I was talking to, Simon Harrison, a business intermediary about, increasing this. And he made a good point. We also have to look at, increasing the funding limit, total funding limit for SBA lenders, for the SBA as well. So that we don't run into that problem that we ran into 2020 where, there was so much PPP money being given out and it was eating through the 7A program. We also, if we did increase or if the SBA did increase the $10 million, we have to worry about that bucket. Can you talk a little bit about that bucket?
Sure. Well, like I mentioned before, I look at what sector has the largest and lowest default rates. Okay. So, when you're talking about at a $5 million level, there's a $125,000 or $135,000 SBA fee. Well, if that has a lower default rate and we're writing more of those size transactions, we're going to be, again, increasing our money generation for the SBA program to be able to help and support those lower programs. But this is where the money comes from. To be honest with you, I've the ones I've looked at, which have been, $2 million and up for years and years, have a much lower default rate than anything on the smaller side. It's those first 1 year and 2 year businesses that really create the majority of the defaults. So this would only be a money generator. It wouldn't be costing the SBA. This is only a positive. I don't understand, and we haven't gotten any pushback, so don't misunderstand me. I wouldn't understand if the SBA has any type of an issue or problem with this. It's
Right.
only going to be a positive for their other programs, for the lenders, and for the businesses in America. I can't find a downside.
Yeah, no, neither can I. Like you said, it's beneficial to everybody. It's beneficial to the sellers. It's beneficial to the buyers, obviously to the lenders themselves, to our economy, to, this funds other government programs that are needed. It does a lot. So you're right. I don't see any downside at all. I just think the biggest thing is we need to get the attention of the people that make these decisions. We got to get the attention of the SBA themselves. We got to get the attention of Congress. And that's us in our industry standing up and saying, hey,
Right.
this needs to be done. This is why it needs to be done. And the only way we're going to get that attention is from people like you that are watching this, willing to sign that petition and saying and adding your name to that, and not just signing it, but passing it on to everybody, not just business brokers, but SBA lenders, M&A attorneys, anybody you can, so that we can get as many signatures as we possibly can. I mean, I hope, I don't know if we did it in 2020 when it came to that PPP S7A situation that was going on, Steve. I like to think that, our industry did play a little bit of part in correcting that situation back there. We did pull together as a community and, raised our hands and said, hey, this, we got to make sure there's enough money funded in the 7A program to keep it going because it's important. And they did end up increasing it. So we can do it again.
Right. And, it's a unity thing. It's a sharing the information. These are items that we all need to be aware of and know of. Whether this happens or not, you know what? We all have to be in the same boat, working for the good of the industry. Even back in 2020, we made everyone aware of the concern. So at least they were conscious of it and we're able to talk and discuss it. And that's what I'm looking to do today. I want this whole country talking about this increase. And with any campaign or anything that I typically do, I look for people to shoot holes in it. And I did have one email that said, hey, the concern is on the smaller loans, they're not getting fair treatment and all. Well, guess what? This is all going to help them as well. So, right. That was my response to it. Guess what? This is the program that helps those transactions. So I understand your concern for the smaller transaction in the local community, but this is the one that funds it. There's no downside. We're not taking anything away from the community. If anything, we're adding to it and allowing that program to expand. So right. That was my response.
Because even an $8 million business is most of the impact is coming in the local economy still. An $8 million enterprise thing. It's Steve. So this is kind of do you have anything else you want to discuss about increasing the limits for SBA 7A loans?
No, I think it has to happen. Like I said, I'm seeing more and more clientele. I'm seeing more and more broker offices in that range. I mean, it's a natural progression. But the SBA is just so far behind, being 14 years ago, the last increase. And that's really it. How could anyone expect what money you had 14 years ago buys what you have today? My initial newsletter, the first paragraph is, have you bought groceries, gas, anything in the last, 12 months? Have you tried to finance a car or a house or anything else like that? I mean, there's nothing that I'm aware of that hasn't risen double digits in rates and expense. So it's time for us to get with the program. Even before all these recent increases, you know what? We're 14 years behind. It's time for them to step up. If you really want to know what I would love to see happen is not only the increase, but some kind of cost of living increase on a scheduled basis to reevaluate the maximum. Because are we going to have this conversation in another 14 or 15 years?
That's a good, an automatic increase.
Yeah.
That's a great point, Steve.
Now today, what I'm looking for is that NIASA code requirement to be removed, because that would just instantly allow our expansions. Not demand that they buy in a different industry. That's the key thing here. If I can get that taken away, great. But my ultimate goal would be, put some kind of cost of living increase in there every X amount of time, or a reevaluation period, or something that looks at this program on a some level basis, 5 years, 3 years.
You're absolutely right. Steve, and to the audience, we're going to have a little bonus section. This program today was supposed to be just about increasing the limits on the 7A loan from 5 million to 10 million. But Steve and I started talking before the show started, and we said, it might be a good idea to talk about this to the wider business brokerage, business intermediary, M&A world, because, let's just bring it up, Steve. Talk a little bit about what you and I were talking about before we jumped on, because I think our community needs to hear this.
As far as the industry nationwide, what I'm seeing and hearing, and this is something I was speaking just a few short days ago, and I was talking to the leader, and what always comes up is, well, how's your business doing? Well, I happen to be on the honest side, so I said, well, it's struggling. It's a little bit tight right now. There's a lot less listings that I'm seeing, but really, he said, well, what are you seeing from the brokers? And I said, I'm really seeing, brokers have so many less listings, and I don't care where they are. I'm getting calls from brokers in California, in New England, in Florida, in the Midwest states, all struggling to secure listings right now. And we're trying to understand why. But what he asked, and this was before the meeting, he said, please tell my group, because these brokers think that it's them and it's that they're alone. If you could tell that to the 50 people in the room, that would be usually helpful. And I'm sure comforting to these people to say, you know what? You're not alone struggling. No one's listing their businesses. People are working harder and harder, brokers, for each and every listing that they're getting these days. And, you know, it's funny because I talk to lenders and they're finding the same thing. They're seeing a lot of transactions, but not a lot are moving forward. Everyone seems to be back in that wait and see mode. Now, whether that's the current economy, whether it's the election year information that's around, or what the factors are, some of the transactions are, you know what, our numbers are a little bit down because of the extra expenses that we haven't accounted for yet. You know, that's something else that we've seen with these huge, quick increases in shipping, costs on products, materials, all of those things. It will take the small business owner a year, 18 months to adjust for those and either pass those on to the customer, find different vendors, adjust, however. So a lot of the larger companies were seeing that absorption of that expense until they realized it and understood exactly how to address it. So we'll see numbers in 22 or and 23 that were dipping a little bit before they adjusted for those increases. So those particular buyers are saying, well, maybe I wait another year now that it's normalized and I have my expenses back under control. So, and that's just us trying to analyze why these listings aren't happening right now.
Yeah, and
But
for my individual practice, I saw a decline at the end of last year, going into the beginning of this year, and then in the last 3 weeks, 4 weeks, it seems like business owners are now ready to start moving forward, but they weren't for a while there, and
right,
I talked to a lot of business owners, Steve, a lot, and all their reasons are I don't see a one type thing. Everybody's kind of different on the reasons why, but I'm now starting to see those business owners, some of those business owners starting to say, yeah, I'm ready to go forward. I think personally, I think 2023, I think we're getting 2024, we're getting off to a slower start. I see things are loosening up a little bit. I'm hoping that we're going to end up being 2024 being, a decent year. But I think we need to get past this presidential election, no matter who. I don't want to get into politics, but no matter who gets elected, I think we need to get past this presidential election. And then we've got the Fed the other day did not, cut rates, but they are saying they're still planning on cutting the rate, at least 3 times this year. So hopefully that'll help as well.
right. And as that gets puts off again, if you're a business owner in that $6, $7, $8 million range, you're watching the news and you're watching the turbulence and you're watching the interest rates being promised to be lower, but they're not. So, again, I think all of this contributes to the hesitation of the business listing and the business owner. That's just my opinion. But as you mentioned, the last 3 or 4 weeks, there has been a lot more excitement. I don't know. And typically going into the summer, we slow down. It's usually June, July, and August are our slowest months, but we are seeing a lot more activity. But again, we're seeing a lot more activity on the larger side,
Yeah.
which is where they need the most help.
Yeah.
So,
Here in Florida, it seems like I don't see that decline. So I used to see a decline in the summer, and I haven't for like 5 or 6 years, except for the COVID situation. But
right.
we always get, around the holidays, we get it just goes off the cliff. But Steve, I'm really glad that you shared your insight. You talked to a lot of business intermediaries around the country. You talked to a lot of different lenders, so you have a good pulse on the what's going on with the sales. And I appreciate you sharing that with my fellow business brokers out there. I really do.
Oh, absolutely. You know what? That is my mission right now, is to share as much information as I have, as I learn, as I explore, and make a difference in the world. Like I said, I'm thinking someone will take over this program as far as the $5 million, or I'll be gaining more and more support by the big boys. And what matters is that this happens. That's really the bottom line. It helps the small business in America.
Steve, you're a very humble person. You're very, you don't care about, getting credit for anything.
Thank you.
But I just want to say, for myself, and I'm sure most of the business brokers out there are the ones, at least the ones I know, would say that you're a legend in the making, Steve. And, I appreciate everything that you have done for our industry over the years, from, being the architect of the forgivable seller's note to helping push to that PPP petition a couple of years ago, just constantly educating our industry and our community, and just everything you've done you are a legend in the making, and gosh, this is just going to be another feather in your cap. I know you're going to have the support of the industry behind you to help get this increased from 5 million to 10 million on the 7A loans. But you're the driving force for that, Steve, and I just really appreciate everything that you've done.
Wow. All right. Well, now that I'm blushing, I do appreciate you saying all of that. It is critical, and there would be nothing better in my life to see this happen and have taken part in the increase. That would definitely put a cap on my career for sure, and it would be a huge piece of my legacy if I could really get enough support to make this happen. So I appreciate all your exposure there, helping me put the message out, get the petition out to the world, and really gain support for this program. But I think together we can all make this happen. No question about it.
We can, Steve. We really can. And do you fellow business brokers, lenders, attorneys in our space, CPAs, anybody listening to this, buyers, sellers, anybody listening to this, we need to get this passed. It's good for everybody. It's good for the buyers. It's good for the sellers. It's good for the lenders. It's good for the U.S. economy in its whole. So keep your eye open for a petition that's going to be going around. It's going to be going out by email. It's going to be on social media. Please sign the petition. Not just sign it, but share it with everybody you know by email. Post it on your social media, a link to it on your social media. Do everything you can do to push it. And I'm telling you, when I say that, we only need, if you spent 20 minutes doing that kind of stuff, and everybody out there in our industry or that's related to our industry spent 20 minutes doing that, we'll get so many signatures, and then, hopefully we can make this pass, because it's great for everybody. Fellow business brokers, thank you so much for watching today. I really appreciate it. And one last thing you can do, if you could do me a favor, the best thing you could do is maybe just share this video too. Share this video on your, social media. Send it, to other people by email, so that before that petition goes out, they can start to understand what Steve's trying to accomplish by, what he's trying to accomplish and why. I just think the more people that know this, the better it will be. As always, I love our community. We always come together. We always make things happen together. I love you guys, and let's do it. Until next time, thank you very much.